Everyone, and thank you for inviting me to this event. I'm looking forward to sharing with you, our key thoughts on where Malaysia, ASEAN, the world is headed. I mean, we definitely live in very interesting times. So I have 15 minutes. I have like a slide deck here of about 30 plus slides. So it's going to be pretty quick. But you'll get a copy of the slides, and you can always ask Q&A later after the final session, as Ming-Tian said. So let me kick off. So the good news first. When you look at ASEAN, and this is our GDP growth numbers or forecast for the next 2 years, 2024, 2025. And if you look at ASEAN, we are looking at quite a significant acceleration from 2023. And this is really being borne out in the numbers you've seen from Malaysia. Yeah, the latest 3Q GDP numbers remain very robust. So you can see for the ASEAN 6, we're going from 4% in 2023 to 4.9% in 4.8% in 2024. Fiscal consolidation on track, very important, given our debt levels and the need to get the fiscal deficit down. But the bottom is where the consumption bit comes in. Civil service pay hike, government pension hikes as well. Minimum wage will increase next year, and we're seeing higher cash handouts as well. So all that we think will keep consumption buzzing along next year. Now back to the overall ASEAN growth picture. What's driving our sort of very bullish growth expectations for ASEAN and Malaysia this year? These are the 8 key points. A lot of them are admittedly cyclical in nature. We expect more central bank easing. I know there's a bit of uncertainty now with Trump policies coming into the play, but nonetheless, we do expect monetary policy to continue easing in the US, and that will give room for ASEAN to cut rates as well. Low inflation, inflation was an issue the last 2 years, but for many countries, including Malaysia, it's actually come down quite a bit, and that would be good for consumption. The third point is probably the most structural in nature: supply chain relocation and rising FDI. We used to think, all these countries would benefit: Vietnam, Malaysia, Indonesia, Thailand. But it's become increasingly clear that 2 countries are benefiting a lot more than others: Vietnam and Malaysia. Yeah, so Malaysia is in a very sweet spot when it comes to attracting supply chain relocation FDI. And number 4 is a part of that data center investment boom, which Malaysia is standing out in ASEAN for. 5 is again a cyclical issue of countries. Steady tourism recovery, again cyclical. We're seeing flight capacity come back. We're seeing visa waivers as well, helping incentivize intra-regional tourism. And again, when you see the data later, Malaysia does stand out quite nicely. 7 is China's stimulus. A bit iffy on this one. Still waiting to see something bigger. A China bazooka. Still missing. And 8, special economic zone, which again I would put under structural rather than cyclical in nature. All right, first one, Fed cuts. We do expect cuts to continue in the US, despite some, probably more inflationary policy from Trump in terms of tariffs, in terms of tax cuts, also in terms of repatriation of illegal immigrants. That's going to make the job market a lot tighter as well. So not as aggressive as we expected before, but we're still looking at a cut in December. We're still looking at 75 basis points next year as well, and another 50 basis points in 2026. So monetary policy will continue easing in our view, but at a more moderate pace. And these are the interest rate expectations for all the countries. Malaysia, we don't expect any cuts, primarily because we didn't raise rates as much in the first place, and also because our inflation outlook is a little bit more complicated than for the other countries. But you can see the big cuts are coming in from Indonesia and Philippines, primarily because they raised rates the most over the last couple of years in response to Fed rate hikes. Inflation. So generally, inflation across the region we think will come off. But Malaysia is an anomaly here in a way. So we see acceleration in 2025. And that's primarily because we do have some tax hikes, we do have some subsidy removals, and we do have the big one, petrol subsidy cuts coming. So that we think will have an inflationary effect on the economy, which is very reasonable. But at 3%, it's still within reasonable levels. These are some of the measures in the budget that I mentioned that could be quite inflationary. So diesel subsidy cuts, probably the big one this year. But you can see a lot of smaller taxes and smaller subsidy reductions as well. Chicken and eggs, high value goods tax, services tax as well broadened. So all this will have some inflationary impact. 2025, the big one will be targeted subsidies for 195. I'm sure you're all looking forward to that. I don't care, I'm getting an EV, so it doesn't really matter. So SST, increase in minimum wage, and definitely a very reasonable increase in sugar, sweetened and beverage duties. So all this contributed to that 3% number I showed you from Malaysia before. Now, supply chain relocation. Now, this is not a new thematic. It's been happening for a while, but perhaps more in terms of trade flows. Now, I show you this because Malaysia is already benefiting, or ASEAN as well, is benefiting from the US and China being more antagonistic. So the US is importing more from us and less from China. You can see that here. And if I show you the China stats, China is doing the same. They're importing less from the US and more from ASEAN. So if you look at the right-hand bar charts there, you can see every ASEAN country, pretty much, and Malaysia is there as well, has gained export share to the US. And it's a similar case with China as well. Just to show you that ASEAN is in a sweet spot when it comes to these two guys fighting it out and looking for alternative suppliers. Malaysia, though, has more than that. Yeah, so Malaysia has sort of a homegrown investment upcycle, and these charts are quite informative. It goes all the way back to the 1980s. We had various policies before which caused a spike in gross fixed capital formation, which is basically investment activity. The most recent one before the current one was in 2009-2010 with the new economic NEM and economic transformation program. But now we have the Madani economy initiatives. We have the NETR, we have the NIMP, we have the National Semiconductor Strategy. We have a lot of blueprints, basically. And executing on them, we think will keep the investment upcycle alive. And that is regardless of what Trump does. Yeah, this is in our hands. It's all about our execution. So that's a key buffer for Malaysia in the Trump 2.0 world. Bottom two charts show you the FDI and DDI picture. What I would be most impressed about is this. You see that the gray bar here is DDI. For the last 10 years, and I think this has a lot to do with political instability as well, domestic corporates have not been investing. They've been investing less and less in Malaysia, which is always a bad sign for any country. But in the last 2 years, we see a recovery in domestic direct investment. So FDI has always been around, and of course it's an important part. But the recovery in DDI is what really gives me confidence that domestic businesses are feeling better about the environment. And that's going to be a key support when issues about trade crop up next year with Trump 2.0. Data center boom, I won't spend too much time on this, but you can see how Malaysia stands up. Amount of commitments and early stage indications of investment in data centers in Malaysia is massive. Yeah, every country is building up data centers. Of course, well, there's a lot of data. But Malaysia has a lot of advantages in terms of location, in terms of resources as well. And we appear to be quite well positioned to continue to benefit from that. Most of it is happening in Johor. Yeah, so it sort of dovetails with a special economic zone strategy as well, which hopefully we'll get more clarity on in January. How am I doing on time? Okay, I've got about 6 minutes. So this is the electronics upcycle. I put this up because it's not the same as it used to be. Yeah, in the old days, before AI, every country which was in the electronic supply chain, like Malaysia, like Singapore, we would all benefit equally to, say, Korea, Taiwan, because we're all part of the same supply chain. But this time around, you notice that ASEAN 6 is lagging. Yeah, Malaysia, Singapore is lagging. And if you are a stock market investor, you'll know tech stocks in Malaysia are also lagging. And it's primarily because we don't have much exposure to the current thematic, which is AI. Unfortunately, that's more a Korea, Taiwan, North Asia story at this point. But hopefully, as it matures, there'll be more room for Malaysia, Singapore to participate, and of course Thailand as well. Tourism recovery, good news here. We are seeing a very strong recovery in most ASEAN markets. But again, Malaysia does stand out. You can see here, in terms of China tourists, we're already exceeding pre-pandemic levels. We're the only country to do that, in ASEAN so far. And that's not just because of the great food. It's also because we have visa waiver program, which has been a big boost. And we have that for India as well. But also because flight capacity. AirAsia has reinstated a lot of capacity between Malaysia and China. So that's really helped bring back the tourists as well. I talked about China's stimulus. Still quite muted. We're not quite sure what the Chinese are thinking at this point, given the election results in the US. Maybe they're waiting for more Trump policies before they fire the whole four fiscal bazooka. But certainly, the measures so far have been quite incremental. These are all the monetary measures and some policy measures to support the property market. These are more the fiscal measures which were announced last month. We still don't think it's enough. We think we'll need to follow through with a larger fiscal stimulus package, worth 10 trillion renminbi, or 7% of GDP. So we don't think the China growth issue will be solved immediately. It's going to require a lot more attention. And that has implications for ASEAN, obviously, because ASEAN, China is our biggest trading partner, our biggest source of tourism, a big source of FDI. 13% of Malaysia's FDI came from China last year. So we have to keep watching China. The only good news from all this is, and it's sort of a Pyrrhic victory, is if China gets slapped with 60% tariffs and we get slapped with 10 or 20%, which is what Trump is talking about, you obviously have this tariff engineering or tariff arbitrage, which should accelerate FDI flows into ASEAN. But I'm not so keen on that. Honestly, if China suffers, we will suffer, regardless of what happens. So, hopefully it's not as bad as we think with Trump 2.0. Special economic zone, I think the economic drivers of this are fairly simple to understand. Malaysia and Singapore, actually, we should have done this 20 years ago, but we're finally getting around to it. We're cheap, they're expensive, they've got capital, we've got labor, we've got cheap rent. Look at the differentials here. If I was Singaporean, I'd be salivating at this kind of cost savings. So you just have to make people movement easier, and we are working on that as two countries, but a lot more can be done, in my view, these sort of economic advantages should be shared with the rest of ASEAN as well. So, if I was Malaysian authorities thinking about how to make this a more of an ASEAN story, and we should, because next year we are chairman of ASEAN, maybe why don't we sort of make it easier for other ASEAN countries to participate in the special economic zone, labor movement. We've got plenty of tech companies which need talent. Why don't we get Filipino, Indonesian engineers? Allow them to operate in the SEZ much more seamlessly than trying to operate in Penang, or maybe banks which are trying to enter Malaysia, they could operate in the SEZ rather than the whole country. So there are many ways to think about this. It just depends on execution, and hopefully our powers that be are thinking about this more long-term and intelligently. And the other thing that Singapore is doing that will help ASEAN and Malaysia is their renewable energy targets. So we have this ASEAN power grid, and to be fair, it's one of the success stories for ASEAN. And Singapore is actually driving it in a big way, because by 2035, they want 40% of their energy to be renewable. And they're going to get it from a number of sources. Obviously, they're not crazy enough just to depend on Malaysia. So they're going to get all these other countries to supply as well. But Malaysia has a part to play, and we have already started bidding to export up to 300 megawatts to Singapore for a start. Now, okay, I'm going to try to run on 2 minutes. Of course, there are risks. What I've gone through for you is the base case for Maybank. This is what should happen if Trump doesn't do anything crazy. But obviously, Trump election win is the top risk for us, and what he's going to do with tariffs, we have to wait and see. But generally, I think being ASEAN, we're not a priority. I think we're way down the list for Trump. I'm not sure whether he knows where we are. So at the moment, he's focusing on China, Canada, Mexico. Makes complete sense, because those 3 countries are 50% of US trade. We don't even register, so hopefully it stays that way. But of course, there'll be repercussions, secondary effects that we have to talk about. China, excess capacity, deflationary shock. This is something we need to be careful about for ASEAN. If China can't sell to the US, they will dump it in other parts of the world. So that could be a big deflationary shock. And we might have to get more protective against China imports and balance that geopolitical relationship going forward. Stop and use inflation, that means less rate cuts. US cracks down on tariff evasion. Seen this happening already, with the solar panel industry in Malaysia, Thailand, Vietnam. But I think, again, Malaysia is not the key target. Vietnam is. I'll explain that in a second. US cracks down on consumer inflation. Again, Vietnam is in the spotlight there. We are off the list, so that's good. China hard landing, post-pandemic fiscal scars, that's more of a long-term issue. And China aggression in the South China Sea. I think I've got 4 more slides. So just to show you that the markets reacted quite rationally after Trump won. So what went up? Bitcoin. Anyone's got a lot of Bitcoin? Please email me and we can have lunch. All the equity indices went up because, of course, you have deregulation, tax cuts. If I was an equity investor in the US, I'd be incredibly excited. And the US now, guys, is almost 70% of the MSCI benchmark. It's almost like the only game in town right now if you're an equity investor, which is quite scary for the rest of us. But look at what came down. You had a 10-year bonds come down. Makes sense. There's going to be a more inflationary environment. Bond prices need to come down to reflect higher rates moving forward. China equities came down because Chinese would be worried about what Trump's going to do. Emerging market equities came down. Again, stronger US dollar, always bad for emerging market equities. Plus, a lot of us are export related, oriented, so that's going to be a vulnerability as well. Crude oil came down. Makes sense because Trump's mantra is drill, drill, drill. He's going to end the ban on LNG exports. So we may want to think about that, especially since 20% of Malaysia's fiscal revenues still come from the oil and gas industry. So, we should be, on watch for that one. Euro equities, because that whole relationship is a bit nutty. And gold, because when equities in the US go up, the gold tends to come down because everyone's super bullish. Okay, I'm 2 minutes over my time. Now, a couple of risks. Ethnic one and tariff war, already mentioned this. As I mentioned, we're not directly in line of sight, but we are at risk of collateral damage. Some other things Trump can do, eliminate the de minimis rule. And this is basically where, imports to the US below a certain nominal amount, in this case 800, do not attract duties or tax. So what happens is a lot of stuff is shipped to Mexico, broken up into smaller parcels, and sent to the US without any tax or duty. So they could eliminate that. That could be quite disruptive for trade. Target currency manipulators, again, Vietnam is the issue here. And the nuclear option, remote China's MFN status, most favored nation trade status. There are only a few countries in the world that don't have MFN status. Russia, Belarus, Cuba. You don't want to be in that basket, basically. Yeah, so it's a tough basket. So that would be a nuclear option, but we're nowhere close to that. Yeah. Currency manipulation, just very quickly. Why is Malaysia off the list? Because although we have a big bilateral trade surplus, 23 billion, our current account surplus is less than 3%, so it doesn't tick that box. And we don't, intervene in the foreign exchange to make our currency unfairly cheap. The country that is most at risk is Vietnam, because their GDP, their goods and services surplus, 112 billion, 20% of GDP. Yeah, it's crazy. But more, the stuff that really pisses off the Americans more is that their deficit with China is also 112 billion. So it's like, are you guys just shipping stuff in from China and then shipping it to the US? Is that the game here? So the Vietnam has got a lot of explaining to do. And of course, the current account surplus is a lot bigger as well. Trump's policies, deregulation, immigration, tariffs, taxes. This just gives you an idea. You can look at this later in terms of what he can do just by himself without Congress, what he needs Congress for, which is more the tax issues, and what could be challenged legally. But I would say legal challenges in the US generally do not go against executive action, especially in areas like national security and trade, because the courts usually say, we have no expertise in this area, so go to town, do what you want to do. So I don't think that's a defense. And these are all acts that he could use to impose tariffs. A lot of them require 3 to 6 months in terms of lead time to do investigations, etc. The one at the bottom is the nuclear act button, but even that could be challenged by Congress. Yeah. So we expect the major tariff real action to only start towards the middle of next year. I'll skip this. Okay, final 2 charts. So we're very big into Venn diagrams in Maybank. So if you haven't seen a Venn diagram for a while, I'm going to show you 2. So this is currencies. What's vulnerable, what's not. So target of Trump, trade surplus, Taiwan. Yeah. So if you look at North Asia, if you think our balance with the US is big, these guys, Taiwan, Korea, Canada, they have much bigger trade surpluses. They're in the firing line there. Unfortunately, the ringgit is sensitive to 2 key vulnerabilities. One is it's sensitive to tariffs on China. And I'm sure you've heard this from Bank Negara as well. When the yuan weakens, we weaken because we have such a close relationship with China in terms of trade. Unfortunately, that's a negative for us. the other big negative for us is we're quite sensitive to US Treasury yields. So when they tend to go up, as they have done in the last month or so because of inflationary concerns, the ringgit and also the Thai baht tend to weaken. So if I had to make a guess, I would say the ringgit is going to have a pretty tough year next year. Not horrible, but the bias will definitely be a weakening one given these vulnerabilities. And last one, if we can't count on trade to sort of drive the economy, we should perhaps look at, or trade with the US to be more precise, we should look at our other relationships. And this is a good place to be. Yeah, we're right in the middle of this Venn diagram because we are part of so many trading agreements. So we're part of the RCEP, which covers about 30% of global GDP. We're part of the CPTPP. Don't ask me what it stands for right now because I can't remember. But it's about 15% of GDP. Yeah, so we are in a good position to sort of divert our attention away from the US market and work on these agreements. And of course, last but not least, we have ASEAN, right? ASEAN is the big prize. We've been working on integration for 50 years, but there's so much more to do. And given that Malaysia is the chairman next year, I think there's a lot more we can do to buffer against Trump 2.0. So it's going to be an interesting year, but Malaysia has options, is what I'll end on. Okay, thank you.
Wow.